Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The roller coaster that is Wall Street is getting ready for another climb. Dow futures are up 134 points. The NASDAQ is up 34.75. The S&P is looking to open about 14.5% higher. And when you take a look at the larger index, you can see that that's good news because, once again, we're continuing to monitor where it plays along the 200-day moving average just to see if it continues to stay above it. The 50-day has now completely crossed the 100-day moving average. We will see whether or not these numbers maintain or if we can get back up to the 100-day. Now, what's happening is that investors are breathing a sigh of relief that a direct military confrontation between the U.S. and Russia over Syria has been avoided. But the question is, how long will this last? Now, overseas, they're having a lot of trouble. The Shanghai Composite and Hang Seng were both down more than 1.5% each. Analysts say that sell-off was driven by nervousness around the weakness in the Hong Kong dollar. This is the third straight day of falls for the Shanghai Composite. The Nikkei actually closed about 0.25% higher. In Europe, they're all down a bit. The FTSE is down about 0.5 percentage point. The DAX is down 0.1%, as is the CAC in France. They still have about 3 hours left to go. U.S. Ambassador to the UN, Nikki Haley, says the Treasury Department will announce new sanctions against Russia today, specifically against companies dealing with the equipment related to Syrian President Bashar al-Assad, who is accused of using chemical weapons against its own people. Russia's parliament is expected to vote on retaliatory measures soon. And just a few minutes ago, we learned that retail sales rose in March by 0.6%. Now, that was actually more than it was expected. It's also the first gain that we've seen in 3 months. Analysts say that this suggests that the reduction in spending from December through February was actually more of a pause after Americans had spent a lot to recover from last year's hurricanes and wildfires. It also supports the Federal Reserve's view that that weakness was just transitory. Now the question is if the Fed is going to stick with its 2 more interest rates increases that it had scheduled for this year, or they're going to add a 3rd one before December. We will be watching. But that's it for now. Thank you so very much for watching us. Please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports at realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again after the opening bell.